Will, morning.
Brother Rich, how are you?
I'm doing fantastic, sir. Oh, look at
Awesome.
that show we got coming
Look
up.
at
I'm
us go.
teasing it already.
Uh-huh.
Teasing.
Look at you go. Yep. There was a graph and a dial. It's going to be great. It's going to be awesome. Yes.
Yes, it is. Man, it's just such a boring news. We're just trying to struggle to come up with something.
Yeah, I had to come up with something. I mean, it's not like I don't know, I mean something weird with Greenland. I mean, nothing ever happens with I I had to make up some stuff.
Greenland,
I
Schmeenland.
had to go into Chat GPT and be like, make me up some fake news for a show. I'm struggling. It was crazy.
I tell you what, man, the events just keep happening faster and faster. It makes me long
Yep.
for the 90s when you could just, you know, 80s and 90s, just listen to good music and go to the
Yep.
mall and eat a slice of pizza and
Yep.
nothing going on.
Well, and welcome to the fourth turning, brother.
So true. God.
And that's it's gonna be another 5 years of this, and it's gonna, as you like to say, my friend, it's gonna get worse before it gets worse. And
Yeah.
the good news is that uh as it gets worse, there's gonna also be wonderful opportunities in there. Our kids are young, and we can use the knowledge we have to help to some degree shelter them. I mean, they're adults, but we can help kind of put a little buffer there, do the dad thing, right? Do the good parent thing. Um, and they're going to come out the other side of this just fine. As Warren Buffett, who I'm not a huge fan of, but he's right about this. Don't bet against America.
Yeah, that's true.
You know,
Yeah, we were
so
having I forget who a bunch of us were sitting in the hot tub the other night, just kind of ruminating and stuff. And a good friend was quoting Charlie Munger, who, of course, Charlie
mhm,
Munger and Warren Buffett were really tight and
yep,
had some similar philosophies and then some divergent philosophies. But I said, I would never be Charlie Munger or Warren Buffett because once I made my 5 mil or whatever, I'm done.
hmm, yep,
I can put that in something safe, earning 4 to 5%, and have a really comfortable, you know, top
mhm,
5% life.
yeah,
It's all about the psychology of money. I recommended the book literally 100 times. I finally got one of my closest friends to read it, and he showed up at the range the other day. He just came running at me, and I'm like, "What is this?" And he just grabbed me by the arm and grabbed me like this. Is I get it. I get what you've been saying all this time. I'm
yeah.
like,
Well, and and I read it after you recommended it. It's a great book. I recommend everyone read it as well. Um, for me, it's the game. Can I build the better mousetrap? And we're going to dig
explain what
into
you
that.
mean when you say the game.
The monetary game, the news game. None of us can see the future. Nobody's ever going to get it all right. All those sorts of things. But as I'm transitioning into this part of life, um, where I don't want to say my retirement is secured because it's not, you know, it's not that secure, but I'm trying to make it more secure. And I'm
Mhm,
finding ways to do that using some options trades,
mhm.
which is not go out and, lever your money up to the moon. It's not that kind of options trading. We're going to get into that over the next number of shows here. We're going to teach you guys about that.
You are going to teach him
And
about that. You're going to teach me about that.
well, I've got some ideas on how we can do this so that we'll do it as I'm teaching you, but of course everybody comes along for the ride. And there's a lot of ways to skin that cat, right? And going back to your reference about the 80s and 90s, well, back then, it was literally put it in anything and chill out, right?
Yeah, exactly.
And you're I've heard you're a big fan of that yellow metal, and
Mhm.
but let's face it, for a long time that was not a great fun place to be.
I was just
Yep,
before it went.
right. So,
But here's the thing, and I don't know if
mm,
I don't remember. I looked over the show notes a couple times, and I know gold and precious metals are in the talk about. But before we get into the show, thank you so
mm,
much for the 6 folks watching us live. Please like and hit that share button. We haven't even got started yet. Um, but I think that's an indicator. You can't do QE to infinity and not
mhm.
expect a flight to assets because your money is becoming more worthless by the day. And I hope that's
Yes.
not an alarmist thing I'm saying here.
No, it's just math, right?
Yeah, exactly.
And old J Dog, he just started QE. It's not QE again at the last meeting. It's temper. We had permanent open market operations. Now we have temporary open market operations, and as we know, there's nothing more permanent than a temporary government program. Um, so that's what it is. I would add that I think the QE, let's say it's yeah, I'm going to surprise you with this. I'm going to say that's only maybe 35-40% of the reason gold's going to the moon.
Oh,
The
I
biggest
agree with you. There's a
the
whole
biggest
host.
buyer of gold is central banks.
Now, why would they
And
do that?
that's because they
They
saw
have
what
the full
happened to.
faith and credit of the United States behind that fiat currency in your pocket.
Hmm.
Why in
Yeah,
God's name would they fly to gold all of a sudden? I'm stupefied. Help me.
because of the sanctions on Russia. Putin told
Ah,
them how to get around the sanctions.
he sure as hell did, didn't he?
He sure
When
did.
when Sleepy Joe Biden come up with his idea, I've got the nuclear option for Russia if they tried. And
Hmm.
brother, they had already, what did they
Yeah.
have? 680 million or 680 billion, I can't remember. That they got cashed out their dollars and got
Hmm.
gold and like, yeah, you can
Yep.
Swift, you can kiss my ass,
Yep. And he
so
and
stupid.
the biggest buyers of gold by far are the central banks, and they just keep buying it. Doesn't matter what the price does. So they're kind of putting a floor underneath it. I expect to see a pullback on gold here relatively soon. It's had a heck of a run, of course. And silver, I mean, that looks like a tech meme stock. I still own both. I've got I just learned a new way to put it. I've got my ounces, which is my physical, and then I got my paper. So the
Mhm.
ounces stay. They're never going anywhere.
Yeah,
Um, but the paper stuff, I'm slowly each time silver or gold rips a little bit here, I'm selling just a little bit.
smart move.
So
Let's welcome some folks.
yeah,
Who we got on this
let's do
morning,
that.
Will?
I see Will Parker's on. Good to see you, brother. Brian's on from North Texas. I'm sure it's much warmer than it is here in Wisconsin. Who else we got?
My good friend Chris Lucy is on. Good morning, brother. So good to see you. Doug is on. Says good morning from cold, snowy, and windy Columbus, Ohio. Stay warm up there, my friend. Coin number 78. Tony is on. Says, good morning, folks. Good morning, Tony. So glad to have you on. Um, I
Don't
guess
don't forget Don Bothwell down there now.
oh, where's Don at? Is he hiding? There
He's at
he
the very
is.
bottom. Yeah, yeah,
Sorry
there
about
you
that,
go.
Don.
Yeah, it's all good. Good to see you, brother.
I love to
And
have Don
Walt's on
on.
too.
You talk about a brilliant guy. We need to do a show with Don sometime. I really
Yeah,
enjoy
let's
that.
do that.
Don,
Yeah,
let me
let's
know
do
if
it.
you're ever up for that. That'll be fun.
Yeah. So they say bull markets don't die of old age. Something has to happen.
Hmm.
Well, nothing's
You're
really
not going to
happening.
scare us with bubbles, are you, this morning?
Matter of fact, I intended to come up with a bubble background for this morning, and then I forgot because I was doing drywall work again last night. So,
Yeah.
um, are we in a bubble? Well, we're gonna dig into that.
Mm.
Um, and it's not as easy as you think it is.
Really?
Because
Well,
how
yeah.
far can it go? I mean, let's face it. I mean, I can remember when silver, and I'm sure you can too. I can remember when silver went through 50 back in 2012 ish,
Yeah.
and that's it. It's going to the moon. And what, a year and a half, 2 years later, it was at 15 and went sideways for a decade,
Yep. That's right.
right?
Yep.
So it's we're gonna dig into a little bit. What is a bubble, and the little bit of the psychology behind that this morning too. Some was obvious. Some I learned a little bit doing
Yeah. People
research
say
here.
you can't anticipate a bubble, but I would submit there are lots of barometric pressure warning signs that something's about to pop.
There are, and like everything else, the timing is difficult, right? Because psychology
Hmm.
gets involved. If you got out of silver at 60 because it was 20% above its all-time high, well, it's feeling kind of silly right now,
Yeah.
right?
Kicking
And then
yourself.
then the FOMO kicks in and you buy back in at 97 right before it goes down. I made that number up, guys. So, okay.
It was
So, you know what I'm saying?
96 the other day, wasn't it?
I was, and I think the futures are up. I think I saw 98. And it depends where you go in the world too with silver, which is really interesting. Singapore is higher than London. Um, so we're gonna see what happens. And I don't have silver as part of the show, so let's go down this little rabbit hole here.
The spot price
The
currently is 94.
94, okay. And the markets,
94.
US markets are not open today, guys. So that's
Right.
gonna, it's that's where the volume is. So we'll see what happens on tomorrow morning. But Comex, they just raised the margin, I mean, not margin requirements. I'll call it margin requirements for silver. So it used to be to buy a silver's a silver futures contract, you had to put, I think it was 10% down. You had to deposit 10% cash with the COMEX. Well, they raised that to 15%. Now that doesn't apply just to new trades. It also applies to current trades or current holdings. So what that did was, let's say Rich Brown has $1 million worth of futures contracts on silver. So you got $100,000 down, right? They changed the requirement. You have to have 15%. Well, now you got to come up with that money. You got to come up with 50 grand. Well, one way to get a hold of that money is to sell some of your silver futures. These are up dramatically, right?
Mm-hmm.
So that the day after that happened, silver was down 7%, 8%. And some of that was people selling silver to get their numbers back in line. And this is part of how they broke the silver market way back in the day, was they just kept raising the requirement for how much money had to be down there to just drive people out of the market and drives the price down.
And that was the two brothers that did a run on silver. Is that who?
Hunt Brothers? Yep, tried to corner the market.
Brothers.
They got darn close too.
They did.
And so I think there's going to be competing forces here. The electrification of everything is going to drive a lot of demand for silver. I believe it was Samsung just bought out an entire mining company's like future.
I saw that, yeah.
Yeah, I mean, for the next 20 years, they bought them out
right.
at, I think it was $80 an ounce.
Holy
so Samsung's going to be in some
smokes.
serious trouble if silver goes down a lot. They're going to have a problem on their hands. So you've got the electrification side that's driving silver prices up, and there's actually very few silver mines in my understanding of this. It's more of a byproduct. You're mining for gold. Oh, look, we found some silver. You're mining for platinum, palladium, whatever. Oh, well, look, we found some silver. Mm-hmm. So there's very few dedicated silver mines. So they can also drive down the price of silver by just changing the margin requirements on it. JP
How's that not manipulation, though?
Oh, it is.
Yeah. Okay. Didn't Goldman Sachs just get their
JP
hand smacked? JP Morgan, sorry.
Unless Goldman Sachs got it. JP Morgan got it maybe 7-8 years ago, paid out $1 billion fine without admitting any guilt. Yeah. If I pay out $1 billion for something, you can bet I was guilty. Okay, I'm just saying. I'm just trying to get out of it. But that's
a speed
the silver
ticket.
market.
It's no big deal.
Right, yeah. Oh, it's just the cost of doing business. It was something like 14% of the profit they made doing what they were doing. So, okay, there you go.
It's not a bad gig.
Something like a guy I know had a Dodge Demon as speeding tickets, the cost of doing business, right?
That's right.
So, it's just the way it is. And that's the silver market. And so when industry needs more of this cheaper, and they want their profit margins to go up, I mean, I'm probably going to rustle up some hate here, but you think Trump might encourage somebody to do some of that to bring the silver price down?
Mm-hmm.
Yeah, he will. Same as Obama would have. Same, of course, you never trace it back to them. There'll be 3 cutouts between those things.
But see, I remember back in 2020 when I really started buying a lot of silver, it was like $25 a share, and that was 6 years ago. But the math was telling, I think you and I talked about, like, look, relative to the price of gold, based on the gold silver ratio, silver should be somewhere north of $60 an ounce. And it wasn't because of manipulation. And then once the hand got off the beach ball, it shot off. Right. But anyway, let's welcome some folks on, and then we'll jump into today's show. Got 15 folks with us. Who we got on?
Oh, let me see here. We stopped with Don up there. So lost my place. See, Walt's
I've got
on?
it right here for you, boss.
All right, here we go. All right, look at me. Look at you go. You're right there for me. Walt, coin number 138. We got Will Rhodes on, a quorum of wills, I believe. Michael's on. Good to see you, brother. And 10 lettered, 1461's on. Who else we got?
Guile is on from the Philippines. Good morning. Brian Schuler is on from North Texas. Has been at and below freezing 2 days in a row. I'll go outside to feed the livestock. I'll only go out. Yeah, I don't blame you. That's pretty rough out there. So Will's got a darn good show for you. We got the Fear and Greed Index.
Yep. So our standard started here, Fear and Greed. This has come up, as you can see from the chart. It's come up considerably since last November-ish. We're even starting to see articles from Bloomberg talking about complacency. I mean, the market's been up. If you count dividends in, the market's been up I say the market, I should be more specific. The S&P 500 has been up 9 months in a row. I did a quick little chat GPT search on that. Last time that happened was COVID, post-COVID shutdowns. The time before that was 1998, or maybe it was 99. Anyway, it was a long time ago. So, gee, you think we're due for a pullback? Yeah, we are. And it's going to feel like, I can remember, maybe you're old enough too, brother, to remember all the way back to March, April of 2025, when the market was down 15%. Everybody thought the world was going to end. After 9 months in a row of the market just going high and to the right, we get a 10, 15% pullback. Oh my gosh, it's going to be terrible. Okay. We're going to get a little bit of that today, where we think worst case scenario is. I'm not saying that's going to happen, but worst case, because if you can figure out a plan to handle the worst case, whether that be the Mexican American at the gas station at 1 o'clock in the morning or the stock market, you can build a plan off of that, right?
Mexican American. How have I never heard of that before?
Oh, I'm unabashedly stealing that one from John Correa.
Jeez, I've never heard that.
Yeah.
Doug says, according to a quick Google search, the largest active silver mines are in the U.S., primarily in Alaska, Nevada, and Idaho. So would that help the U.S. economy if silver continues to go to the moon? What do you think?
You would think so. Yeah. I mean, I don't know how many people they employ. I don't know how that works. So
Walt is on. He says, what if there's another Walt? Yes, we have Walt Davis on. We got to, what would two people be? Wouldn't be a quorum, would it?
No. And it's not quite a murder of crows. So I don't know. We'll have to come up with something for those guys.
Come up with something there.
Yeah. So, all right. So where's the world going to go in 2026?
Love this slide, by the way.
Yeah. I tried to get ChatGPT to put your face on there. It wasn't working well. So
that's a shame.
Try. Yeah. So the market's going to go up or down. Yes. They're going to go up and down. Okay. We're going to dig a little bit.
But not sideways. Is that what you're saying? It's going to go up and down.
In the end, so here's a good one. So define, because sideways depends on the time you look at, right?
True.
If the market goes down 20% and then back up 22%, whatever it is, and it ends the year at the exact same number, it went sideways, but it sure didn't feel like it during the year.
No.
Right.
Roller coaster.
So that's where we get into the psychology of stuff. And that's where things get testy. And there's that little midterms thing this year too. So
oh boy.
That we got to put that in there. So is World War III going to break out? I mean, I hope not. I don't think so, despite what the media says. Are precious metals in a bubble? Yes, please. And most importantly, will Greenland want an NFL team? So
I love that one.
I just couldn't help myself on that one. I tried to help myself. I just couldn't. Let's see here. So let's go to the next one, brother, and we'll start digging in and see what old Zoltar has to say.
Zoltar.
Yeah. So here's my big picture stuff. And I'm open to any pushback from anybody on this because, there's the old saying, predictions are for, making predictions for stupid people. So here I go. Volatility. And volatility in everything, really. Volatility politically, markets, precious metals, you name it, it's going to be volatile. Okay. And we're going to get into this on the next slide, but how far can markets drop and still be in a long-term bull trend? Because that's important to know, right? And we're going to go real long-term with that answer. Are metals in a bubble? Yes. Is it going to pop this year? Maybe. I don't know. We'll see. We'll talk about how far down that could go and still be in a long-term bull trend. And we also have to, as far as the metals go, we have to, like we're talking about, tie in the geopolitics of this, because that's having a huge impact on that, along with, for silver specifically, the electrification of everything.
Yeah.
And we did a show, what was that? Maybe a year ago even, about the electrification of everything, and talked about the silver shortages. And now you've got people standing for delivery of their silver. And what that means, guys, is, if you got somebody out there trading silver futures, they just trade the paper.
Right.
Okay. They buy the future,
Until
sell.
they don't. Right.
And now you've got people standing for delivery of thousands upon thousands of ounces of silver. They want the physical metal. Okay. because it's kind of like Bitcoin. If you don't own the keys, you don't own the Bitcoin. Well, it's kind of
That's
the
right.
same thing here because it could get confiscated away in a government emergency or pick your crisis, right?
It's happened
So
before.
it sure has. So geopolitics, I think, is going to drive a fair amount of this. We're seeing this now with the shot across the bow from the Trump administration on tariffs on Europe. Uh, Europe is what was the old phrase for Asia? The dying man, the old man of Asia was one of the countries back then. Europe is kind of the old dying man of the world economy.
They committed suicide. They
They
literally
did.
empathetically drove their countries off a cliff, with the exception of perhaps Hungary and Poland and maybe, Romania. There's a couple that have
Hmm.
really stood firm on their anti-immigration stance, and they may
Yep.
get to keep their country, but the rest of them, it's pretty much a wrap.
Yep.
Demographics
The
is going to take over at some point, and then it's just a mathematical certainty that it's over.
Exactly. And we can add into that. You take Europe's entire stock market, figure out the capitalization of that. I think it's the fifth is equivalent to the 15th largest stock in the U.S.
Holy smokes.
So when these people are like, "Oh, you're going to ruin trade with Europe," okay, all right, gee, that's going to hurt for like half a day. By
Yeah, I
lunch,
won't
that'll
be
be
able to
over.
get some good Parmesan cheese or Belgian chocolates. Boo hoo.
Yeah, exactly. Never been that big a fan of BMWs myself, anyway. So,
Yeah, me either.
um, and the to lead's oh my gosh, you say lead when you try to combine Ted and Ted Leonard. My gosh, so Germans forgot their energy cost matter, and this is we're going to dig into this um
That's so
a little
stupid.
bit in another slide here because I wanted this is the psychology of generations, and I've really been thinking about this a lot.
Mhm.
What's Michael said there?
And they are back in Davos planning the next extraction of wealth from Europe. Well, that's a freaking truth. God
Yep,
almighty.
exactly. And their future plans for America, I'm sure.
Mhm.
Um, oh, John Shriver's on. Good to see
Good
you, brother.
morning, John. And Bruce is on up in a snowy Michigan.
Ah,
Walt says we lost UK, Germany, and France long ago. Yeah, man.
yep, yep.
Sadly, we sure did.
I mean,
Will
they're
Perk
they're
says, hold
jailing
on,
people.
BMW blasphemy. They make great motorcycles. They ain't figured out the car thing yet.
Yeah, I just for the cars. I don't know much about motorcycles, but for the cars, I just haven't been that big a fan.
Mhm.
And the where was I going? I forget. So let's go back to this. So the geopolitics, I mean, we're getting a lot of reordering. Now, he's being Trump. He's the bull in the China shop, going in there and probably doing the same things most anybody else in office would do, but he's doing it out loud and in front of everybody, right?
Mhm.
That's who he is. You can love him or you can hate him, but the sooner a person moves into acceptance that that's who he is and what he's going to do, the happier you'll be.
Some people really liked having an old grandfatherly guy, falling off his bicycle and eating ice cream at inappropriate times, and
Hmm.
not hearing from him for a year to stretch while interns ruled the world's last superpower. Can't get my
Hmm.
words out this morning. I don't like that. I like a guy
Yeah.
that like just kind of swing, like you said, swings that damn baseball bat in the china shop and
Hmm.
smacks something every now and then, wakes everybody up.
I do my little motivational slide at the end every time, and I really debated between two this time. I wound up not going with this one I'm going to describe, and it showed a bunch of soldiers going towards a helicopter, dust everywhere, and it says something about you need to thank the violence for the peace you have.
Amen.
And if you referenced the 80s and 90s earlier, that was the peace we had because of the quote unquote violence of the 70s.
Hmm.
And by that I mean the financial markets volatility. Okay. And then we've been reaping the dividend off that for decades because that reset the system literally. Well, it's time to reset the system again. And it ain't pretty when it happens.
One of the things that I heard Trump say over the weekend, and again, it was just a blurb on the radio as it moved right quickly by it, but I thought, man, it was so freaking good. When Paul Bremer ran the Coalition Provisional Authority in Iraq and Bush Jr. sent him over there, he made the biggest strategic blunder in the history of strategic blunders with Coalition Provisional Authority Order Number 1, the this Debathification Act, and several other things that came out of that very first thing. And and Trump was like, this is the stupidest thing in the world. So what he learned in Venezuela is let them keep running it. Let them keep the lights on. Let them keep the water going. We'll pinprick the Maduro cronies apart one at a time. But I'm not just going to go in there and just sweep and say, nope, you're all fired, and then the place goes into chaos. And next thing you know, we've got IDs blowing people up. It's stupid. So he's learning, a lot of these lessons. Thank God.
Well, and there's a great thing there. So something happened and that administration is learning from it. That's what we've lacked because, and my parents are boomers. I love them. Okay. I've got other family members who are boomers. I love them. But as we all age, we go, well, you know what? This other way worked forever. Why are you kids messing with this? And by the way, get off my lawn. Right. So, it gets tougher. And when we don't get the next generation getting into leadership, that's what we end up with. Right. So it's something, but the next generation going into leadership, what we experience right now with the Trump administration, whether it be Hegseth or fill in the blank, whoever, this is Gen X and leadership. It's chaos and we don't care. So it's a sea change, and a good chunk of the population, the boomers, aren't going to like it, and they vote a lot.
Yeah.
Right. So it's going to matter.
Jeff says, good morning, everyone. Are you going to speak about Trump's push to make it illegal for corporations to own residential properties? I haven't heard that. I would be shocked if BlackRock would be cool with that. I don't know if you have any thoughts on it, but before I ask you about that, Will, Tony says the U.S. government would never confiscate your precious metals, nor would it ever infect U.S. citizens with syphilis, which they did both.
Shocking.
The Tuskegee experiment is a dark stain on our country, and they did it to poor African Americans down in, I think, Alabama. Tony, correct me if I'm wrong on that one, but
I believe that's correct. Yes,
horrific.
To Jeff's talk about illegal for corporations to own residential properties, that is a big push right now. And this is where Trump is that anomaly, right? People want to put him in a box. He's a Republican, all about big business, all about Wall Street. Well, this is part of that push for the regular guy. And Wall Street would, I think, be well advised to listen to what Trump ran on. And what his administration is saying is Wall Street had their run. It's Main Street's turn. And if you look at all of his policies, at some level, they come back to that.
Yeah. That says Trump sees a massive housing repos coming. And if that is the case, what a great opportunity for corporations to go in and snatch up large swaths of stuff. And what would that, that is just insane. If they did that, what would that do to the average American's dream of home ownership? It would evaporate it. You cannot compete with these multi-billion-dollar multinational corporations.
Well, but that ties into he has proposed to make it illegal for Wall Street institutions to own single-family homes.
I love it.
And they own a bunch. And if those hit the market, so this is the yin and the yang of it, guys. And this also plays into the volatility we're talking about. Let's just say tomorrow he waves the magic wand, writes an executive order. They all have to divest within 60 days. Unreasonably short period of time, for example, here. Well, what's that going to do to the housing market? It's going to crater because all this inventory is going to hit, right? And they have to be rid of them in 60 days or 90 days, right?
Be the ultimate buyer's market, wouldn't it?
It would be, but what's that do to your home value and my home value?
It goes in the toilet.
Exactly.
For a long time.
For a long time. Well, for those who are older, that is going to hurt, and they're going to hate Trump for it, right? But that's also what we've also seen is a huge shift of wealth from generation to generation.
But here's the caveat, though. Somebody like me that I own my home and I'm not selling my home, and I don't use my home as an investment vehicle. Maybe I pay less property taxes for a while, but I certainly don't care. The grandkids maybe can split it up or do whatever they're going to do with it. But I'm going to
Yeah.
die in this damn house. Now, if you use your home as leverage, then yeah, it's gonna suck.
Yep. And the other part of that too is the feeling of it, right? The wealth
Mhm.
effect, right?
Oh, true.
Because
Yeah.
now
The
it
psychology of
definitely
it.
plays it that wealth effect happens more with a stock portfolio than a home value typically. However, it's still there.
It's on
And
your
you
balance
can
sheet, right? As an asset.
absolutely, yep,
Yeah.
absolutely. So that's gonna but especially older folks, the boomers, they see their home value go down. That other than the GFC, the housing crisis, that hasn't happened since 1982,
Yeah.
right?
That's
Now
right.
the younger people are going to be like, "Awesome, I can afford this now," right?
Hmm.
So there's again that goes back to the whole volatility thing. And even within that, Trump came out and said, "I want the credit card companies to cap their interest rates at 10%," right? Well, the
A
next day,
lot
of
of this
course,
stuff the left should be jumping up and down and applauding, right?
if Biden would have put that out there, they would be,
But it's a
right?
damn TDS is a real. It needs to be on the DSM, man. It is a
Yep.
real thing. Trump
Yep.
derangement is real.
And you're right. And within that though, people were like, "Oh, that'll never happen." Blah blah blah. I'm like, have you not read the man's book or watched what he does? Right now, the average interest rate, I'm going to make my numbers easy, is 24% on credit cards because I looked it
Hmm.
up. Okay. Well, that would mean the average of these is about 17. He wants 10, it's at 24, average it out to 17. If he asks for 17, he's going to end up at 21 or 20,
Hmm.
right? So this is just his negotiating. Instead of doing it behind closed doors and saying it in dulcet tones, we have examined the balance sheets. No, he's out there going, damn it, lower these rates.
Right.
But who's that helping? Young people, right?
Hmm.
And anybody carrying a credit card balance, right?
Yep.
Who did it hurt? The banks. It hurt
Right.
Wall Street and it's helping Main Street, right? So you can see over and over again in these things, but bank stocks took a hit the next day, right?
Mm.
Who's that hurting? Guys like us.
Yeah.
Who's it helping? Young people and
Mm.
poorer people, right? The lower part of the K, so to speak. So this is another example of this, but it causes volatility. And volatility doesn't feel good if a person isn't prepared for it.
True. Let's
So
get some comments here if we can,
yeah,
Will. We got Doug saying, speaking of boomers, it seems to me like boomers like to invest in individual stocks of companies while subsequent generations focus on mutual funds and precious metals. Gen Z and millennials also seem to like cryptocurrencies. Do you see future stock market issues due to lower investments once the boomers are gone? I know that mutual funds also purchase stocks, but I wonder if the lack of individual buying stocks will hurt the market. What a freaking fantastic question, Doug.
that is awesome question. Okay, so
Uh,
let's dig into that a little bit. Can you bring that back up so my old eyes can read the
Absolutely.
bigger print? Thank you,
Yeah.
sir. All right, so I will generally agree with the boomers prefer individual stocks to mutual funds. The younger folks, they don't even like to have bonds as a hedge in their portfolio. They just SPY and chill. Um,
Hmm.
do I see future stock market issues due to lower investments once the boomers are gone? Okay, that's a great discussion. The prevailing theory out there is that when the boomers pass on and that wealth gets handed down to the next generation is going to spend it
Mm.
because that's what tends to happen. Okay. Because they get step up basis, so they're not going to pay taxes on that if it's properly structured. The So there's two sides of that. Could the stock market go down considerably because of that selling? But then if that money gets spent into the economy, that money eventually filters back through to those same companies. So both could happen on certain timelines, right? Um, the and to your point, mutual funds also purchase stocks. Yes, however, there's more concentration with, say, a SPY fund that buys the S&P 500 because it's a cap weighted index. So they're buying a whole lot more of the Mag 7 than they are, say, of there's a casino on Vegas. Now, is it Win? Anyway, it's like 0.5% of the S&P. So a lot more money goes to NVIDIA than Win, right?
Mm.
So um, So basically speaking, yes, if the younger generation starts spending that money, and then you can actually filter that back around to if prices stay high, say for housing, they're going to spend that money because that's the only way they're going to get into that game, right?
Mhm.
Unless Trump goes through with this, not only saying Wall Street firms can't own individual homes or limits them in some way, but the bigger part of it over the long term is get rid of a lot of these restrictions on building. Look at
Mhm.
Florida versus California. California
Yeah.
home prices are going up, up, up. Florida's going down, down, down right now because they overbuilt, but it's because they were able to overbuild.
Yeah.
So uh, overall, I would expect to see this goes back to our volatility thing. Let's say,
Mhm.
um, just to make the example easy, let's say 100% of the boomers die tomorrow, and
Yeah.
let's just say everything moves through the courts and everything's properly structured so the next generation gets a hold of this wealth in a month. I would expect to see a lot of selling, right?
Mhm.
And then on a long enough timeline, that money will filter through the economy back to these big companies. It's a good chunk of it's going back to Apple, Home Depot, take your pick, right? So it goes back to our volatility talk. Expect volatility as this fourth turning continues and the older generation with a lot of wealth, not only in the stock market, but also in their homes. And Junior is off on his own and has his family and lives wherever. Well, mom and dad pass away. I don't need that house, so put it on the market.
I tell you, we do see that. Of course, uh, you know, run a construction company, and the phone ringing all the time is for, "Hey, we got mom's house. It's got some structural problems. We're up in Indiana or wherever. Fill in the blank. We're coming in can we meet with you guys and get it fixed, put it on the market?"
Yep.
I get that call damn near every single day. So that's an outstanding point, and one that's very astute of you, since you're not in that market, but you know that.
Yep.
Don says that's a big point, Rich. So many people have been told that, quote, your home is your biggest investment by the dirt pimps. He's told the realtors that they're locked into that thought process. They'll do whatever they have to do to keep that paper value as high as they can, hence the proliferation of HOAs.
Yes.
Love that.
Yep.
Dirt
And
pimps.
dirt pimps. I'm using that one. I'll send you a quarter every time I use it.
Yeah.
Okay. And let's think about this for a second. So, Rich, what if I went to you and said, Rich, you could really do a lot better in the market if only you'd lever your money up 10x. You'd ask if I started smoking crack or meth,
Mm-hmm.
right?
Right.
But that's your standard home mortgage with 10% down. That's a 10x leverage.
Mm.
Think about it. You got $100,000 home somewhere. I know it's not realistic. It's just easy math. You
Sure.
put 10 grand down, that house doubles in value over a period of time.
Mm-hmm.
You didn't double your money. You only have 10,000 in. You 20
Mm-hmm.
extra money. See what I'm
Some
saying?
of this,
I'm sorry, 10x. You 10x. Sorry,
yeah,
10x.
yeah. I know where you're heading with it. Some of this reminds me of I saw Elon Musk giving a talk somewhere recently, and he said, "You got two economists walking down the road, and one economist says to the other, 'Hey, I'll pay you $200 to eat that pile of dog crap.'" And the other was like, "All right, give me the money." He eats the crap. They're walking down the road a little bit further, and the other one goes, "Hey, here's a pile of dog crap. I'll pay you $200 to eat that one." So that guy gets down, eats it, takes the $200 back. And they keep walking like, "Wow, look at us. We put $400 back into the economy." Like, it's
Mm-hmm.
stupid.
Yeah.
Some of this stuff, I just, again, it goes back to the psychology of money. What do you
Mm-hmm.
want the money to do for you? For me, it
Yep.
buys experience. It buys freedom. It buys the ability to not, you know, care what my home price is going. Now I'm worried about if some meth head moves down the street for me, it's going to ruin my home value because it's going to destroy the neighborhood more than it's going to hurt my value.
Yeah.
But I mean, some of that, I'm never going to be, uh, you know, because here's what I find, and I'll throw this to you, man. I see a lot of my friends that are junkies on this shit. I mean, they're just gambling addicts, really, more than anything. And they will step over dollars to pick up dimes. And it's like, what are you doing? And I can't convince them otherwise because they enjoy the game of it. And if you enjoy the game, then go for it, man. Have a knock yourself out. But when I ask them, "Hey, can we go do this? Can we do that?" There's reasons why they can't do that. Well, I'm too leveraged on this. I can't really right now. I'm like, Okay, well, I'm going to go
Yep.
and have fun. So
Yep.
I don't
Well,
get
and
it.
I think I got this from Matthew McConaughey. I can't remember who it was from, but it said, you know, money is freedom tokens.
Yes, absolutely agree with that.
And my retirement budget is X number of dollars per month. And every time I make that much in the market, it's one more month of freedom.
Love that. Yeah.
And it's a good way to get the dollar sign and the psychological part of the dollar sign out of there. I just, I make X number of dollars in the market. I just bought a month.
Hey, speaking of that, me and my son-in-law were talking about this the other day, building spreadsheets to help him financially craft the next, because he's a young man in his mid
Mhm.
20s and he wants to be financially independent and he's doing the Ramsey plan and all this kind of stuff.
Mhm.
And I'm like, look, it's just numbers. Don't add the dollar sign in your Excel spreadsheet. Get that
Yep.
shit out of there and just do the math, do the math, do the math until the math works. And then if you want to add the dollar sign, add it. Because I want you to do the math without emotion.
Yep.
And then you can apply emotion later and get excited about what we're going to do and all this
Mhm.
other stuff once you have that money. But until then, it's just a math problem you're trying to solve. Would you agree with that?
I do. Yep. And that's I never get all the way there. I don't think anybody really does, no matter what they claim. But I do my
Mm-hmm.
very best to take all the emotion out of my stock market stuff. Anything financial is just
Mm-hmm.
numbers. It's just math. I don't get emotionally attached to owning XYZ stock. I don't. It's just a ticker. I don't
Yeah.
care. So
Don says, I'll respectfully disagree about the boomer investments. Us boomers had parents who went through the Great Depression. Many of them didn't trust stock market, but mutual funds allowed a diversified portfolio of stock, bonds, or a mix. The ones I've worked with for almost 29 years found that diversification made the buying decisions much easier.
okay, so let's bring that one back over just a second. I want to touch on something there because there is a bit of a generational shift there, and it's not just boomers to say Gen Z. So when interest rates started, say in 1982 at 18%, and they were headed down, interest rate down means bond value up. At the same time, lower interest rates meant more economic activity, which meant stocks up. Generally speaking, okay, now the way the 60/40 portfolio was sold, and there was a lot of truth to it for a long time, was that the bonds would cushion any fall in the stock market. As the stock market starts to fall, they're going to cut interest rates, and then your bond value is going to go up. Okay, that's the big picture. The problem was 2021, 2022, and 2023. They kept raising interest rates because of inflation. And in
Mhm.
2022, when the stock market went down, take your pick on the number, the bond market also went down. So 60/40 did not work because of the inflationary regime. And a lot of young people saw that and went, these bonds didn't do that. And then I don't get the upside in bonds that I get in the stock market.
Mhm.
So we're seeing younger generations wanting to go more and more towards 100% stocks. And that, of course, if there's when, right? We don't know when, but when there's a crash, because there will be eventually, they're going to get burned really
Yeah.
hard. Because if enough of a stock market crash happens, that's going to bring deflation.
And
And
it's
when
not
that happens,
if, it's
they're
when.
going to, right.
Yeah.
If enough stock market crash happens, they will lower interest rates because economic activity, for the stock market to crash that much, economic activity has to come down to spur that on. They're going to lower interest rates and print money. That's going to drive bond prices up. And they're going to get caught on the worst side of that because of what happened because of the COVID money printing.
Mhm.
I don't care who was in office, it was just numbers.
That's right.
So, yep.
Ted says, Boomer here. My small time investing different than I expected 35 years ago. Never imagined long periods of such low interest rates as an example. Massive government debt. Man, so
Yep.
true.
And to your point, long periods of time with such low interest rates. It's like you hear younger generations to Ted's example there. Why would I put my money in bonds? They make 3%, 4%. Stock market goes up 20% every year. Right? Because they've been conditioned since COVID.
Yeah.
Right? I
Yeah.
mean, that's 5 years now. They've been conditioned. Stock market go up. Oh, it only went up 14% this year? Oh, that sucks.
Damn.
I mean, imagine, the average of the stock market long period of time is 8% a year, right? If we have
Mhm.
an 8% year in 2026, no matter how volatile it is, if it ends up at 8% a year, there's going to be a lot of people pissed off.
Yeah.
right? Never mind if it's 1%.
Mm-hmm.
Right. So this goes back to our psychology and your talks about psychology of money. People's expectations are stock market goes up double digits every year. Why would I put my money in bonds? 4%. So as these things happen, this is part of that complacency we talked about, right? People are just expecting this now, right?
It's an unrealistic expectation, folks. I
It
know the
absolutely
15
is.
folks still with us are just like, yeah, if,
But I mean, let's face it, when you were 20, 21, 22, did you I mean, I'll tell you right now, nobody can tell me anything, right?
probably
Especially if
not.
I
No.
was, especially if I was 25 and got out of college, during COVID time, and then watched the market do this. Some old guy told me, "Listen, man, don't expect this to last." I'd be like, "Whatever, dude."
Yeah. Easy, grandpa.
Right? Exactly. You go sit on your porch there, buddy. Okay. Um, last one here, midterms. I'm sorry, domestic stuff.
Yeah.
Domestic fill in the blank problems. I don't care what it is. Yes, and growing. Period. Just watch the
Absolutely
news.
growing.
Okay.
Did you see them go into that church yesterday
Yes, I did.
with Don Lemon? Man, I tell you what,
Mm-hmm.
I don't want to see hearings.
Yep.
I don't want to hear about DOJ investigating. I want to see handcuffs. I want to see perp walks. This is a violation of the FACE Act. This is federal law
Yep.
that's been violated on camera,
Mm-hmm.
and there needs to be some people held accountable. But
Absolutely.
because if not, this will, because look at what Waltz and Jacob Fry have done. They have just thrown gasoline, jet fuel on this freaking problem instead of toning down the thing. Go, well, technically, Renee Good, as tragic as it was, probably a justified shooting, but they're scumbag politicians and they're going to throw gas on this freaking thing and make it worse. Well, at some point, it becomes insurrection. I don't know where that line is, but we're getting close to it. So that just speaks to your point, and growing.
Yep. And the media is going to play it up. We've talked about this before. From January 1, 1971 to December 31, 1972, 24-month period, there were 1,800 bombings inside the continental United States. That's reported from the FBI.
That's right.
They didn't break out which 18 months it was. Kind of doesn't matter.
But the press kept it quiet, did they not?
Not only did they keep it quiet, but like when I was growing up, my parents were news consumers of the time. We took the morning paper, the evening paper, we watched the 5:30 world news and the 6 o'clock local news. But if a bombing happened in Cleveland and it didn't make one of those four sources, it never happened.
That's right.
That won't be the case this time around with social media.
Nope.
And the 24-hour news cycle. So much less volatility than we experienced in the late 60s, early 70s is going to have an outsized effect, which is going to give the perception that we have more problems than we've ever had before.
That's right. And perception's reality. I mean, there's one fat white guy who's an anti-ICE protester sitting on the back of a car. I was watching on repeat on X. One guy with an AR-15, and it's like, oh shit. And it makes it appear that this is everywhere at all times, and really, it's a pretty isolated place. I'm sure there are parts of Minneapolis where you can go and there's nothing going on, but there's other places and it looks like freaking Mogadishu in 1992, 93.
Yeah. Well, in my understanding, I'm sure you know much better, during the Troubles in Northern Ireland, it was like a 2 or 3 block area, but the news made it sound like it was the entire region.
Yeah. Shank Road, man.
Right. Yeah.
Was bad.
So, yep. And my perception, until I learned more about that after you and I started talking about stuff, my perception was it was like the whole area. I mean, it was, square miles of this. It was a couple blocks where the
riot. You're absolutely right. But it's in that case, it was like Londonderry. There was a few square blocks there, a few square blocks in Belfast, and there was just a general unease everywhere else. But I mean, that level of sectarian strife could definitely come here, and it's kind of here. Let's be honest, but it's intensifying. I mean, whether you're talking about the Portland police chief crying because two TDS gang members were shot trying to run over an ICE agent, and if he thought it was an appropriate thing to cry on camera,
yeah. Well, and that actually that feeds in my next one with the midterms. Each side's going to do a pump and dump. Okay. Yep. And I'm using a stock term there. So, you talk it up and then you sell it before the masses figure out that, nobody really needs buggy whips that much anymore because nobody's using horse-drawn carriages, right? So each side's going to do this. So be ready for this cross-check I strongly encourage you to, before you post anything on social media, fact check it and cross check it from an opposing side. Trump did this. It was awesome. Go check CNN. Go check MS Now. Used to be MSNBC. Do that because you're going to save yourself a lot of hassle, and it's just, I think, the right thing to do.
Agree.
So, all right.
Speaking of pump and dump, look at that.
All right. So this is the S&P 500. This is basically calendar year 2025 plus a few days because honestly, I made a mistake. So if we look at the bottom one there, the red one, that was January 1 through the bottom of the tariff tantrum for the S&P 500, down 15%. After that,
it's a great time to buy.
After that, went up if you look at the light green circle there, went up basically 39% after that for a net out on the year of 18%. Mm-hmm. That's volatility. Mm-hmm. And, you know, people have forgotten about I'm just going to say from April to the end of the year, because that went so well, they forgot about the first 4 months, right? Mm-hmm. That's complacency, brother.
Yeah.
Right. So this is the kind of volatility we're talking about. And everybody's forgotten about that 15% down. Right. And that actually goes back to Don's point, his comment, you know, people have gotten to that. Just throw money in there. It just goes up. Right. Just don't check your statement balance. Well, okay, you do you, but I like to check my balances, right? Because volatility matters. Okay. And now the flip side of that is, let's face it, especially going to the midterms, they're going to, and beyond, I don't care who's in office, they're going to print money to make problems go away. Mm-hmm. Print money equals assets up on a long enough timeline. Question is, does a person have the stomach to ride through stuff like this? And if you do, hey, awesome. Okay. So something to think about. All right. Let's go to the next one.
Okay.
All right. So this is the Qs. This is the NASDAQ ETF, if you will. It started, I went back to the beginning of it in 99 there. That's when the Qs started. Okay.
Okay.
Okay. So, and this goes through current day. Okay. So let's talk about the red circle first. Went down 80% during the .com crash.
Yeah.
Yeah. And then I've got some other lines drawn in here and there. It took until 2015 to get back to even money. So just put your money in there and forget about it, right? Yeah, it doesn't always work, right? So you'll also see the 2022 drawdown there with the red squiggly line underneath it, down 37%. Just put your money in there and forget about it. Well, if you're young enough, you'll get away with that as long as they keep printing money. So let's look at these red diagonal lines here. So the bottom one, I just kind of made up a little bit of an average starting from the inception of the Qs through the kind of the middle of the spike of the .com bubble, through kind of the middle of the spike with COVID. And there, if we go back down to that long-term trend line, we're down 44% in the NASDAQ, in the Qs. That'll leave a mark. That would be whatever period of time it took to get there. But if we come back to that long-term trend line, down 44%, a person could still make the argument, we're still in a bull market. We just reverted to the long-term average. Okay. Now, a little more technical chart analysis would be start at the inception there, the low point, if you will, the start of the Qs, go through that peak that's the .com in just shy of the late 2021 there, that top red line, and then draw that trend line out just to get back down to that one. We're looking at a 28% drop. And you'd still be in a long-term trend. That's support for the market, that trend line there. You could go down 28% and be like, man, we're still good. It's not going to feel like we're still good if the market goes down 28%. Okay. And look back, how did people feel in 2022? They feel good about the market?
No.
And that was granted more than this 28%. But the point is, we can go down significantly from here and still be in a long-term bull market. Here's the problem with guys like me, you, Don, Ted, Michael. We ain't young.
No.
You take a drawdown like you did in the .com bubble. Okay. I'm not saying it's going to go down 80%. It goes down half of that. It goes down to this 44%, right? And then sits there for 15 years.
Oh,
That
boy.
will affect people's retirement. At the
Yes.
same time, their home value goes down
Hmm.
because of these other things that are happening, right?
Hmm.
What just happened to a whole generation's retirement savings,
Yeah.
right? And I take your point about your situation. You're never planning on selling the house and all those things,
Hmm.
but a lot of people, that's part of the retirement nest egg, right, wrong, or indifferent, because they had the big house when they had kids. Now they're empty
Hmm.
nesters. They're going to sell and downsize, and your first 500,000 selling your primary home is tax free. Well, that's a big chunk of the retirement savings and planning,
Hmm.
right? So that affects those folks. So the point is, we could see significant drawdowns in housing and the stock market, and people could still legitimately get on TV and say we're still in a long-term bull market, but it's not going to feel like it.
And a lot of
Why?
this is feelings, man.
Exactly. And if
Yeah.
during the same period of time bonds don't offset a good chunk of this, and they're in a, say, a diversified portfolio, then they lose faith in the financial markets. And that goes back to Don's point about the boomers were raised by a generation that did not trust the stock market,
Yeah. That
right?
was my grandparents. Hell no.
Absolutely. Yep. Well, and they lived through the
It
Great
was
Depression. You can't blame them.
T-bills
Yeah.
and bonds and stuff like that. That's all it
And
was.
back then you could make what, 12,
And they did.
14%. And they
Absolutely.
and they made that, right?
Yep.
Now, granted, inflation was higher at the same time, so you
Yep.
didn't necessarily get all that, right, in purchasing
Mhm.
power sense, but you watch your account balance go up, which feels good.
Yes, it
Even if
does.
your purchasing power isn't changing that much, it feels good, and there's the certainty of I will not lose capital,
Mhm.
right? So psychology matters. So now we're going to go to your favorite one, the yellow metal. Okay.
Gold.
Yes. So we could drop down to about 2,500 an ounce and still be in a long-term bull market.
That's right. Because guess what? When I was buying gold back in 2020 at $1,600 an ounce, man, those were
Hmm.
the heady days, right? I
Yep.
mean, and
I,
at
I,
the
bo- I
time,
bought I bought my first ones, my first physical ounces, just after '09 at 900 an ounce.
yeah.
Yay me. Okay. But let's take a look at this trend line. So we start back here. This is GL. This is as far back as the chart went for
Hmm.
on TradingView, guys. So that's where I started there. And really it was flat before that for a long time. So if we start there and we go through the first yellow circle there, which is a peak, and then it matches up pretty good with these other two peaks, that's how I got this trend line.
Can
Okay.
I ask you a
And
question though? Let's.
please.
I love the fact that you went back that far. It's like, look how boring gold was for so long, just
Hmm.
boring. And then look what happened when they started when TARP came along,
Hmm.
2008 ish, Troubled Asset Relief Program, just printing freaking money like it's cool. And it looks like every time the money printer went burr, we see gold freaking jump relative to it. Now I know there's more factors than just that, but it
Hmm.
is a huge reason why it's going up. It's a flight to assets. We've talked about this for ad nauseum for at least a year now, right?
Yep, and I will add to that. It's even in studying the period around the housing crisis, the GFC. It's really more of a fear indicator.
Mm-hmm.
When people are scared, they sell stocks and they buy hard assets.
Mm-hmm.
Usually gold. This time around might be more silver as well. And they're going to buy some hard assets like this. And because look what happened to gold, and I know you know this, from 2012 through 2016.
Yeah.
That was the same time that all that printed money started filtering through the economy into publicly held companies, and their profits started going up because the
Mhm.
S&P, you could pretty much mirror from say 2010 through 2017. You could invert this, and that's the S&P chart.
Yeah, that's true. Yeah.
Okay. So now, is this time different, say in a post 2024 world when it goes parabolic here? I would argue to an extent, yes.
Mhm.
And that extent is the geopolitics side of that, the central banks buying gold. Are they putting a floor in here somewhere? Because if it dips enough, they're going to buy more, and that puts a floor at some dollar amount. And I'm going to put a
Mhm.
dollar amount on because who knows where that is, right?
Mhm.
Um, so it's something to consider.
It's
Also,
probably right around where you've got it there, about 2,500, I would imagine, right?
it could be.
The
I mean,
floor.
my gut honestly tells me it's higher.
Really? Wow.
Like okay, I'll put a number on it. My gut is the the markets overall, humans, we like round numbers, right? Which is why
Hmm.
silver going through 100 is going to be difficult. It's going to go up and test it and come back. It's going to go above and come below it. We're humans. We like round numbers. The round number I'll put on gold is 4,000.
Holy cow! Really? That's the
Yeah,
floor. Damn.
that's where
Okay.
because as long as the central banks come in and start buying more at whatever that dollar amount is, it's going to gravitate back to that because
And
there's
I think we're. I
demand at
think
that
we're.
number.
I think we're a little myopic on this too. I mean, I get it.
Okay.
Daddy America's the big player, but I mean, it's not just the U.S. central banks gobbling
Mm-mm.
this shit up.
Yep.
It's like you said earlier in the show. Russia showed everybody. You want to
Yep.
tell the U.S. to pound sand, get
Yep.
off the currency and get it in gold.
Yep. China's doing it in spades. Israel is one of, as a percentage, they're a much smaller country, a much smaller economy. As a percentage, Israel is one of the largest.
Hmm.
Um, and they're seeing a return on this. And it's supply and demand, right? It's the pet
Hmm.
rock. As long as enough central banks keep buying gold, the price keeps going up in
Right.
dollars, right?
Yeah.
So, yeah. What's
What's
Ted
Ted
say
say?
there? Let me see here. I
I'll read it for
gotta.
you. He says,
Yeah, please do.
my view, gold could correct down, but there are no big anti-gold market forces. Mining stocks were my best performers last year, even last
Good on
month.
you.
Just my view, not a gold bug. Yeah. I
Yeah,
wish I'd have got
gold
in
mining
on that, buddy.
stocks were like a freaking meme coin. Okay, I mean it's just like, oh my gosh. Um, so when this pulls back, word of warning, Ted. When gold pulls back, miners are going to pull back even more on a percentage basis. So just
Mhm.
be ready for that one, brother.
Get ready to dump it, huh?
Um, what's that?
I said, get ready to dump it. Is that what you're implying?
Yeah, I'm whether it's gold, silver, gold miners, silver miners. I've taken some of those profits now.
Hmm.
Um, and it's I'm locking that part of it in.
Hmm.
So, you do you, okay?
Yeah.
Um, so do me a favor, brother. Let's hear the dulcet tones of Rich Brown. Just read
Ooh.
that top part here. Now, bear in mind, this is an AI Google AI overview on this.
As of when? Is this yesterday?
Yesterday.
Okay. The concept that everyone can see financial bubbles except in assets they like is a well documented phenomenon in behavioral finance driven by cognitive biases and emotional attachment to investments. You may keep going.
Yeah, just that. Keep
Okay.
going for just that top part.
It suggests that while investors can objectively identify bubbles in assets they do not own, they frequently fail to recognize or ignore warnings about overvaluation in assets that they're passionate about or heavily invested in. Makes sense.
Yep. And we can see it in ourselves, right?
Hmm.
Right. So we can always pick out somebody else's faults. We see them at church. They're wearing that. Seriously? In public at
Yeah, we
church.
got psychological
Right.
blind spots, man. And
Absolutely.
Justin and
Yeah.
Carol and I did a show just on the 10 most important, what we thought were the most important cognitive biases. And I wish they taught
Hmm.
this kind of stuff in school and
Yeah.
had little games where you could spot other people's
Uh-huh.
blind spots, talk about perceptual blindness. I mean, to things
Hmm.
going on. The famous one, count the balls being passed and the monkey
Yep.
walks right through it. It's
Yep.
like,
Yep.
it's true.
It is. It's absolutely true. And the other one that's interesting that I watch is when look at Elon Musk.
Mhm.
When he was making electric cars and was critical of Trump during the first administration, he was the left's golden child, right?
Oh, yeah.
But then he did something different. Same guy, same car company, right? Same car. Suddenly the cars were junk, right? And they should cut off all the government money that goes to Tesla and all this stuff. So I don't know where that falls as a cognitive bias, but it's like a person you like does something, you're like,
It's
you don't really
tribalism.
agree with it. It's like, yeah, okay, what? Yeah, exactly. That's exactly what it is. Yeah,
Yeah.
thank you. But it's very interesting. The other one I want to talk about here is the bottom one. It's different this time.
Mm.
It's different this time. Most dangerous words you can hear in finance.
On anything, my kids,
True.
I've had this like, Dad, you don't get it, you don't understand. I'm like, yeah, I think I do freaking understand.
Yeah. Yep. And here's the thing. So I've been doing some research on the whole AI thing for
Hmm.
investing, right? we look back and we make fun of the .com bubble, pets.com. They put .com, they never did anything, and their valuation went to whatever, right?
Mm-hmm.
And we make fun of that. But let's also stop and think about the internet did change the world. The optimists were right about what the internet was going to do for the world. Their timeline was off.
I mean, it was off. Yep.
And they're now, and then exacerbating that was the stock market got ahead of it, right?
Mm-hmm.
And I think we're seeing the same thing with AI. And AI is going to change the world. I use ChatGPT. I got the paid subscription thing for it. I use it all the time. I use it to come up with trading strategies, and then I steel man that against Grok. So they fight each other. And it's come up with, I mean, and then I'll tell ChatGPT, write me a spreadsheet that does that trading strategy. And it makes me an Excel spreadsheet that I then download and I just plug in the numbers.
Mm-hmm.
Saved me so much time.
That
was unreal. Okay. So is it going to change the world the way they're expecting? Yes, but that doesn't mean the stocks haven't run too far too soon.
Mm-hmm.
Okay. So now we're all this talk about bubbles. Bubbles are going to pop, right? There's one thing that can happen that will stop this bubble from popping, brother.
What?
Go to the next one. I'll give you the secret.
Oh, God.
If they print enough money and shove it into the markets through stimmy checks, through whatever, the stock market will keep going up no matter what's happening with the economy.
I tell you, I hear you. And I mean, it's mind-boggling to me to hear really, high-level economists say the same thing, but it's like, but then you create another bubble, the dollar bubble. It's like you're just shifting it a little bit to the left, and that's like, oh, okay. Now I say left because I'm talking about left of bang. It's going to get there eventually. Now your fiat currency will crash at some point because at the debt.
But that's a problem for the next election cycle.
That's right. That's exactly right.
Okay.
That's
the midterms are coming up, and look at some of the stuff that the Republicans, I'm not sure if I think it's a bunch of House Republicans have proposed, like you can borrow money out of your 401k to buy your first home at 0%. Okay. So there's a transfer there, right? Mm-hmm. And at the same time, if house prices come down because of what Trump is proposing, you see what I'm saying? You can keep, and then what's that do to Home Depot stock, right? Mm-hmm. Lowe's stock, right? So what's it do for the construction trades? If a whole bunch of people are able to buy homes, what do they like to do as soon as they get in? I want to remodel, right?
But here's the thing. Nothing the government ever tried to do to control prices has worked. Ever, never, full stop. Mm-hmm. Never. You got to let the free market do what it's going to do. But no administration is going to do that because it can get bad, right?
And not only can it get bad, but it takes time. Mm-hmm. And we run on a 4-year cycle, right? Exactly. We don't have time for the market to play this out. The market.
Everybody's leaving DC to go home to run for midterms here in just a couple months.
Yep.
And they don't have time for it. I get it.
Exactly. Yep. And it's easy to blame the politicians on whatever side, right? But they are reacting to their incentives. It was like go back to your thing about Charlie Munger. He said, show me the incentives. I'll tell you what the outcomes are going to be.
Bingo.
And we have incentivized the politicians because we, the people, are too short-sighted. We can't sit back and go, you know what, this is going to take 10 years.
I've talked about it on the show. I was, in some city in America, an older city, and we're on one of those little buggy rides, and you will notice as we move further out from the center of the city, the homes, instead of being this wide, they get narrower and narrower, and the alleys get longer and longer. Mm-hmm. Do y'all know why that is? Because people are responding to incentives. Once they figured out that these bigger homes were like, okay, we're going to tax you relative to the amount of frontage you have on this street. And the builders responded to those incentives because people didn't want big wide homes that they paid a lot of taxes on. Same thing is true in Edinburgh. I'm on a tour in Edinburgh, and they go, looks like there are windows up there in those buildings, right? No, there's not windows. They're painted on windows because they're taxing that amount of windows you have in your building. So everybody just break the damn. I mean, it's one of the most beautiful cities in the world. And I've traveled the world a lot. Edinburgh's one of the most beautiful places, but they bricked a lot of the windows up just to avoid freaking UK taxes.
Yeah.
People respond to incentives.
Right. Look at the number of people who buy homes for the tax incentives. I get to
Mhm.
write off my interest. I get to write. I mean, part of the reason I still have a mortgage is I write off the interest. My effective interest rate goes down. I can, with the interest rate I have, by the time I take the tax advantage out of that, I can make
Mhm.
more money just putting it in a money market right now at 4.5%.
That's exactly right.
I'm
And
responding
that
to
was
an
hard
incentive.
when we lost that. I'm like, oh,
Yeah. Yep. So, um, so how do you keep a bubble from popping? You keep pushing more money into it.
mm.
What's the Fed doing? $40 billion a month in temporary open market operations right now.
Can we
That's going
say,
to the banks.
how do you, can we say, I hate to, it sounds like we've solved everything. We can get a Nobel Prize, right? We'll just keep printing money. But really,
Yeah,
how do you forestall a bubble from popping? Can we agree on that terminology, perhaps?
sure. Yeah.
Okay.
I mean, you reinflate another bubble. I mean, look at the dot-com
Thank you.
bubble, right? It
Yeah.
it popped. They
Mhm.
lowered interest rates enough, they formed the housing bubble.
Thank you.
Housing bubble popped. They shoved enough money in the system to cause a stock market bubble,
Yep.
right? It just goes from one to the other, but to the overall economy keeps growing, keeps chugging along, right? Well,
Mhm.
we can look at a little history here, a little short-term history. If anybody here has been around since 2021, um, you can see here this is in trillions of dollars, proxied by the change of the stock of U.S. M2 supply. Okay, so that's stock of U.S. commercial bank deposits and the assets under management of MMF's money market funds. So this is basically cash out there in the market, right? In 2021, the M2 supply went up 29%.
Mhm.
The M2 supply went up by $2 trillion. Sorry about that. Stock market went up 29%. Now, some of that was snapped back from 2020 still, but look what happened between um, 22 and April
Beyond. Yeah.
through April of 2023. M2 supply went down 0.5%. I remember us talking about that, brother.
Mhm.
What happened to the stock
Mhm.
market? And I'm using the SPY here for the stock market, guys. Down 10%. They learned their lesson. M2 goes up in that period of time of basically half of 2023. Stock market goes up 23%. Add some more money in 24, you get more up. 2025, you shove more money in the system, stock market goes up 18%. Happy constituents, reelection.
Yep.
And you just keep shoving it down the road. And in fairness to the older politicians, this has been working since really the housing crisis. Okay. Before that, they did it more through interest rates and it took time. I mean, why did the 70s, the inflation of the 70s take so long to sort out? Because they let the market sort it out. And then we got 40 years of prosperity because it actually flushed the system.
Right.
And that was caused by the overspending in the 60s when we were still on the gold standard, right? It's almost like history repeats.
Almost.
Almost, right? It certainly rhymes. So we're going to see the same stuff here. Okay.
Mhm.
Now, this is from the Kobesi letter. Full disclosure, I subscribe to these guys, and I really like their stuff. Okay. Um, we're talking about really, we're going to get to here's the K shape.
Okay.
So here's your stat of the day. The top 10% of US earners now will record 49% of all consumer spending. Let's keep in mind 66% of the economy is consumer spending. Sorry,
Mhm.
68% they use here. Okay. So my green underline here, that means the top 10% of income earners account for 33% of US GDP.
Wow.
Okay. Now they keep printing money. This is gonna continue. And Kubesi is on a big kick. Asset owners are the only winners in this economy because as long as they keep printing money, if a person sits in cash long enough, you're losing purchasing power, but your
Mhm.
assets will continue to go up in value. Right.
Yeah.
So this is the K. I mean, you can, if you look at that chart from basically Q1 of 2010 and draw a
Mhm.
vertical line through that, there's your K.
Yeah.
Right.
I
And
mean,
so
man,
this is
yeah.
this is what this is part of what Trump is playing towards because
Mhm.
there's your bottom 80% of the bottom side of that K. You make them happy, he'll get elected. JD Vance will get elected twice, and then whoever after them.
Mhm.
Right now, look at what Trump is doing through that filter of JD Vance getting elected and on down the line. He makes that bottom 80% happy. Reagan's landslide victory over Mondale will happen again and again.
Oh yeah, what did he get? Like three electoral votes, Mondale?
Yeah, it was. He got Minnesota, and that was
Jeez.
it. So, so now here's the thing. So if they start pushing money on the system, okay, the left, Team Blue, will say Trump's giving money to the rich. Okay, so let's just say for a moment he only gives money to the top 10% of income earners, nothing to anybody else. Then that would be a true statement, right? On the immediate timeline, right? Let's think back to the stimmy checks and the studies we've done on that. If you give money to the bottom 50% for sure,
they pay off taxes. They pay off interest and stuff like that, right?
They do initially, and then what happened to credit card balances after that? They shot up, so they spent it, right? Because credit spends the same as real money, right?
That's right.
And then where did that money end up at? In the top 10%. Because they went out and bought iPhones and TVs and whatever else, and those companies reported more profits. They paid their people more, and their stock went up, and the K got bigger on a longer timeline. And timelines matter for re-elections.
Yes,
so
sir.
All stimmy checks, I shouldn't say all, a vast majority, more than 3/4, end up back in the top 10% one way or the other, because when you do the stimmy, that's inflationary. And when inflation happens, asset prices go up. Who owns assets? Top 50% for sure, mainly the top 10%, right? So that's where it goes. So the more fixes they put in, and we can look back at COVID. COVID gives us this, okay? Gives us this ground truth. I know people, I know family members that got these stimmy checks, and they're like, we're finally catching up. We're finally getting there. And it was mainly their own irresponsibility that got them there, right?
That's right. That's right.
But they're like, we're finally getting out there, and then this inflation takes off. And I'm like, yep. That's the end. But how did they feel when they got those stimmy checks?
Right.
Right. They felt good, and they went on and bought things with that, and they felt good. Right. And people who feel good vote to whoever made them feel good. Did we mention midterms are this November?
Exactly.
Okay. Trump's going to find every way to push money into this economy.
And he's floating the idea of the tariff, right? The tariff rebate or whatever the hell he's calling it.
Yep. And let's remember, J-Dog's done May 31st. Trump's going to put somebody in that's going to lower rates and print money.
Yep.
It's going to happen. Now, will it be able to happen fast enough before that? Let's face it, we're not too far away. This is middle of January. We're not too far away from Trump announcing who it's going to be. And as soon as he announces who it's going to be, J-Dog might as well just start packing up his disc, because nobody's going to listen to anything he says. The other guy would be like, June 1, we're going to cut interest rates by half and print $100 billion a month. The market's going to react to that because that's the future.
Correct.
So that's where we're headed. Now, will it happen all in this calendar year? Some. What happened after that? If there's a crisis, that money printer is going to go burr.
Well, that's the thing.
Asset owners are going to win.
Yes. But to your point, though, even if he does launch some stimmies, call it whatever you want, tariff rebates, I don't know what it could be, or his, like you said, the guy that comes in as the new Fed chair does whatever he's going to do. But still, is there enough Trump derangement syndrome over the ICE deportations, the threats against Greenland, Venezuela, Iran? We could go into Iran. I mean, there is a huge buildup in that region that is going on quietly. The 160 and the JSOC are all positioning themselves in eastern parts of Iraq, and they're not there for nothing. They're 300 miles from Tehran. So with all of that geopolitical volatility, even if he does some of those economic things here at home, is that going to be enough to get Republicans reelected in the midterms? What do you think?
Honestly, obviously I don't know. My gut is yes.
I hope so,
because it'll be depending who gets the spin, right? we know which way that's going to go for the lamestream media, but will it energize enough Republicans to get out there? Because usually the party of the president is less enthused to vote in the midterms, right?
Mm-hmm.
So,
Except for our audience.
Exactly, right? So, but also the most active voters are the in this case the boomers and the Gen Z, right? Yep. And so it's gonna, but like boomers, they don't like volatility. Older people, and when we get to be those older people, we're not gonna like volatility either. Okay, that's not a knock on boomers or older folks. It's just the way it goes.
Hell, I don't like volatility. I don't because you're in the market a lot, and you can make money off of it. But for Rich Brown, who's just letting it sit,
Oh yeah, I love volatility. I just see dollar signs when there's volatility. Yeah, baby, let's play. Okay,
I love that.
So will it be enough? It kind of depends on the timeline too. I mean, if something happens, they start pumping out stimmy checks in October. No, they need to find a reason to do it before that.
Amen.
In my opinion.
That's right.
So,
well, they have to, because remember, the politicians are going home during the summer to campaign.
Mm-hmm. Yep.
That's one of their talking points. That's a win. If they do it after it's over, you might as well not do it. Right.
Exactly. Yep. They also have to change the minds of people, and that takes time.
I'm going to welcome some folks on before we go much further. We got Mark tuning in from Australia. Good morning, sir. We got our good friend TC Fuller is on from South Carolina, coin number 1620. I hope you had a good time down in Texas, my friend. Tony is holding on to that 73 Yugo. Should be worth a pretty penny someday. Alan Kelly is warning us about what's going on in Richmond. Man, my God, brother. Nothing but prayers for you guys. Mark says, we all hope the difference this time is that your president is a businessman. He knows that if he incentivizes first world people will do their best to stay on top and take the economy forward. We can certainly hope. It's a crazy time, man. Energize the damn Republicans in my state. Yeah. Well, they got to do something, man. There's a lot of people that feel disenfranchised with the Epstein list, and they're not, you got the Clintons thumbing their nose at Congress. No, we're not going to show up. We're just going to ignore your subpoenas. There's a lot of stuff going on that, hey, man, DOJ, do your job. Do your job. Let's go. Let's get some charges. I've said it before. Me, TC Fuller, I'll handpick a couple other investigators. Give me 6 weeks and an unlimited budget, and I will get you in subpoena power. I'll get you some charges, man. We'll put some people in prison.
Well, and that goes back to, we've talked about it before. There's a left wing and there's a right wing. It's all the same
bird. That's right.
Right. So, all right. So this one is from Rabobank. I highly suggest, there's a guy named Michael Every, common spelling, from Rabobank. Watch any of his long form interviews, 30 minutes plus. Excellent insights into the world. And he's not very well known out there. Okay. And this goes back to our volatility talk. The breakdown of global rules-based order is accelerating. And the rules-based order he's talking about here is the Bretton Woods, the post-World War II. America is the world's police. We guarantee the shipping lanes that made globalization possible. All of that is unwinding. We're pulling back to the Western Hemisphere, the Don Rowe Doctrine, if you will. Right? That's what the Greenland thing is all about. Think about, this occurred to me when you were talking about Putin earlier. The reason Putin pushed into Crimea, Georgia, Ukraine, is he wants that buffer against NATO, right? That's Greenland.
Because we promised him we wouldn't do it. Let's be honest here.
Right. That's absolutely
we said
true.
We wouldn't do it, and we screwed the guy over.
Right. And but
the Greenland, man, but on that hemisphere, that part of the world, as I understand it, there's one place where special weapons are, and that's on the coast of Scotland. There's a sub base there. The UK has special weapons. We have special weapons there. We move it. You take that out, like when the whole Brexit thing went down and the Scotland independence referendum went down, there was a giant fear that, oh crap, Scotland don't like nuclear weapons on their property. They're going to, if they go independent, they're going to tell us to pound sand. We got nowhere to store this shit. So for 1,000 reasons, we need Greenland. And the idea that America buying Greenland, we almost bought it multiple times in the last 150 years, perhaps.
So let's look at this to your point. And it was news to me. So thank you. with the special weapons, and if I screwed this up, correct me, in Scotland,
Mhm.
right? And
Mhm.
then the Brits were like, "Oh my gosh, if that goes away, we have this problem." But from the outside looking in, how was that spun, say, in the U.S. media? These It was spun as economics, it was spun as
Mhm.
all these other things, right? But if
Yeah.
you understood that one point that you just brought up, it changed everything,
Yeah.
right?
And
So
by the
let's
way,
try to
so
find those points
that's right.
to
And when
do
you
so we
have
can understand.
and you have Soviet subs popping up in there all the time. You got China moving into that area, and if
Mhm,
we lose that, which we're having issues with the UK right now, obviously as they continue to go Islamic,
mhm.
we could lose that at any moment. And when you do, we're screwed.
Yep. And those are the
So,
things I'm so glad you brought that up, brother, because understanding that changes the perception of that entire situation. And I never knew that until right now.
no,
So
really,
the as we move forward in this fourth turning, we need to try and find those core reasons underneath all the spin on both sides, because that's how you can better protect and provide for your families,
yeah.
right?
And I
Because
mean, of
you
course,
can
the
tell the
left would spin
future.
it as, but don't you think that if we put that out front and center, the left is going to spin that out as, you know, Trump wants nuclear proliferation in the
Mhm.
Arctic and all this other
Yeah,
crap. I mean, you spin it wherever you want.
absolutely. Yeah. Well, and that's where you got to play the propaganda game. Both sides play
Yeah,
it.
because it's a check
You
against Putin's power. Look what he's already
right.
done. Blah blah blah.
Well, according, hold a second. Hold on. I got to call you out here, brother. Obama said the 80s called and want their foreign policy back, right? I mean, come on. The 80s were great, okay? But no, Romney was right? So, but we need to understand these things, and it has to be played out well in public. And to Romney and Obama's thing, who won the propaganda on that?
Hmm.
Obama, period, dot,
Hmm.
end. Okay. And he was good. Okay.
Yes,
I
very.
I have I have a over the years I have found a newfound respect for Obama. He was a savage when it came to warfare. Okay. And he played it helps when the media's on your side for sure. Okay. But he played the propaganda game, and I'm using that in the clinical way, beautifully.
That's a
Right.
fact. That not just a war pimp, but also the deporter in
Yes.
chief.
Oh yeah.
I mean,
We were talking about that right before
brilliant.
we were, yeah. I
Yeah,
mean, he deported way more people than Trump
stab.
has by far, and the local authorities helped.
Well, remember when they shoved a M5 in some little child's face, Elio Gonzalez, back in
Hmm.
the 90s, and that was
Yes.
under Clinton.
Yep.
I mean, Janet Rito and her FBI burned down the
Hmm.
Davidians and,
Yep.
and Ruby Ridge
Yeah.
and all this other stuff, and
Yeah.
not a peep.
Yeah.
And now here we
In fact, it
are,
was just the opposite. They cheered
Mm,
for it. They have an
yeah.
illegal gun at Ruby Ridge. It was a sawed-off shotgun that was a half inch too short. Come on,
Hmm. Yeah.
seriously. I mean, yes.
And
I
he was
mean,
entrapped
the
by the
law is
ATF
the
to
law.
do it, by the way. So let's
Yeah.
be honest with that.
Yep. So I should go back to that previous one for just a second.
Sure.
And this is one of the reasons I like this Michael Every guy is he's one of us. Our
Mm,
core theme, nevertheless, remains. Actually, let's go back. The breakdown of the global rules based order is accelerating, giving way to a world where might is right. That's
hmm.
not what previous generations it was all about. Let's collaborate and these things,
Yeah.
right? And we're going back to the oldest law of the jungle, which is dog eat dog. And you best get your sharp teeth on.
Mm-hmm.
Okay. Our core theme nevertheless remains buckle up for 2026 and wear a vest. And he is talking about that kind of vest. Okay.
Mm,
The US has ended the global order as we knew it. Now, here's the key for us from the market standpoint. Markets will watch for evidence that turbulence is bleeding into supply chains. We saw what happened during and post COVID with supply chain issues, right?
hmm.
Prices or growth data. If that turbulence goes in there, then we're going to have big market problems.
Mm,
Until then, they are likely to stay anchored to what can be measured. Now, let's talk about what can be measured for a minute. You were talking about CPI and unemployment and all these things that can be measured. And we know the faults in these measurements, but the establishment, we've been using those measurements for 45 years, 50 years,
hmm.
70 years. They're going to stay anchored to that. because the people working in those establishments are human too. It's been working for all these years. Why do you people want to change this? Right?
Mm-hmm.
So this is going to be big problems psychologically for a lot of the older generations, boomers and much of Gen X.
Yeah.
Okay. What can be measured is not just economic and social metrics, but also a cling to when things were normal. Okay. And I sent this slide deck out to a family member who um, is barely a boomer. Okay. Um, and by that, she was born in the late 50s. Okay.
Mm-hmm.
And she emailed me back last night and basically said, yeah, that normal part of this slide right here really resonated, because it's like, no, things were normal then. Now things were just placid, right? And that was
Right.
because the volatility of the 70s, right? We can trace it all back to that. The unanchoring from the past will cause these groups to be uneasy, easy, and scared, and really vocal. And these same people, older folks, us and older, they're also the ones that control media, control narratives in a lot of cases. So
Mm-hmm.
it's going to feel like even more. Okay. So psychologically prepare yourself for this, guys, because this is what's going to allow us to be the level headed ones that get through this in pretty darn good shape.
It really doesn't have much to do with it. But since my brother Jeff put this up there, it's kind of stuck in my mind, and we probably need to talk about it at some point during the show today. And I know we've kind of gone a little long already. We're an hour and a half in, and hang with us, guys. A couple more slides to go. But he's right. I think it was the Prime Minister of Canada, Carney, I think is his name,
Mm-hmm.
said, "So happy to
Yep.
be working together to usher in the new world order," end quote, with a straight face. It's like,
Yep.
and that you talking about geopolitical.
Mm-hmm.
We got China right above us doing some sort of Belt and Road shit. And
Yep.
remember, as the Arctic thaws and those shipping lanes come open, it would be super simple for China to have a end right on top of us. So,
Mm-hmm.
man, I tell you what. And at first, Trump was like, "Hey, yeah, good on him. He made a good deal for his country. That's what he should be doing." But I'm like, interesting.
Yep.
Last thing I
Yep.
would point out here in our comments, Michael Gentili says, talking about Obama, and he reinvigorated race tensions. Man, that is
Big
so
time.
true. I remember the
Yep.
90s I thought we were really past all that.
I did too.
I really to God did. And then
Yeah.
Obama got in there and just freaking
Yep.
fan the flames. What a terrible thing he did.
Yep. Sure enough. So, all right. This is again from the Cabesi letter. I made this comment earlier because honestly I forgot the slide was here because I made a few changes. Europe's been left on the dust. ASML company there became the third company in Europe's history to hit 500 billion in market cap. Number of shares outstanding times market price. Meanwhile, Nvidia casually swings 500 billion a day.
Damn.
Okay. ASML wouldn't even make up the top 15 list in the US. OpenAI alone, a private company, is roughly the size of Europe's two largest public companies combined. Okay. This is what happens when people cling to the past. Europe wanted to stay normal. We want things to stay normal. We don't want to do this. We don't want to do that. Europe is so far behind on the AI thing, they'll never catch up.
Yeah.
Ever. Okay.
That's right.
There is no chance they catch up because you got to have a metric. This is a technical term. Okay. A
Mm-hmm.
metric shit ton of electricity for AI to work.
Which they just threw away.
They just threw it away. And they're completely dependent on Russia for the natural gas to run what's left.
And I hate to say it, in an increasing tech economy, they've imported or allowed a soft invasion into their country of low IQ people who can never work in tech.
Mm-hmm. Yep.
They don't have the cognitive tools to work in that industry. And, it's just, are you reverting back to the dark ages? And your great grandchildren are going to look at, well, I wonder what monster made those viaducts like they did in the dark ages.
Yep.
They couldn't imagine that men during the Roman Empire could build something like bring water down into the valleys.
Yep.
That's where they're heading. They really are.
It is. Yep. You're absolutely right. So, Europe wants to go back to how it was as the world moves on, right?
Mm-hmm.
Remember this going forward, guys. Okay. To go back to then, okay, the world, the rules-based order, we can say, I want to go back to that. But there's a different dynamics here, and here's a few of them. Our national debt was very low. We had room to maneuver, right? We don't have that anymore. Demographics were on our side. We don't have that anymore. Now we
Mhm.
are one of the best in the world when it comes to demographics. China's way worse. Europe is terrible. All those things, but it's not on our side either.
Nope.
Okay. Just not as bad as those guys. Okay. Back then, the world fell into line with whatever the USA wanted,
Pax
partially
Americana,
because
brother.
partially because of the SWIFT system. We could control them through the US dollar. And it never got to the point of sanctions from most countries. All it took was, you know, you don't want us to sanction you, do you? And they'd fall in line. Well, now Putin taught them how to get around that, right? This is none of those things is the case for the next 5, 10 years. So you're going to hear people, we just need to go do this because it worked in 1993. Different times.
Mm-hmm.
Yep.
TC brings up something that's kind of funny, but kind of not. He says, careful, gents, keep talking all ill of Europe and England. He's going to issue a red notice to arrest you two for thought crimes and mean speech. I have a trip to the UK on the books here in less than a year. So maybe I should be a little,
I called dibs on Rich's guns and ammo when he doesn't come back.
yeah,
It's out there.
maybe I should be a little careful of that. I have to think about
So, yeah, and it's so with all that, what's my prediction? Okay,
Right.
volatility,
Mm.
volatility. I would expect a pullback in markets here pretty soon, and it could be, if it becomes that self-licking ice cream cone, it could be pretty violent. Okay, this is like we talked about. This is already brewing and overdue. 9 months in a row of the S&P 500 up is not totally unprecedented, but it's been a long time. It was .com
Mhm.
bubble. Okay. Trump's response is going to be overreact / panic.
Mm.
Now that won't be his public thing on it, but with midterms coming up, he kind of has to overreact
Mm.
if he's got any chance of holding Congress. Otherwise, he's a lame duck for 2 years and he's just going to fight impeachment stuff. So now, what's that overreaction going to be? Print money. And he's got
Yeah.
the setup for it with J Dog going away May 31st. He's got the setup to do that. Okay. And people will criticize whoever he puts in there as, oh, he's just Trump's lapdog, blah, blah, blah. Well, yeah, that's right. Do you
That's
think
what every
Obama
president
would
does.
put
What
in
are you talking
yeah,
about?
you think Obama would put somebody in that wasn't a lapdog, right? Come on. It's talking points. Okay.
Mm.
So let's noodle this through. Fed starts printing, increase money supply. We saw what
Mhm.
that did to the market in the previous chart, right? Equals inflation. Okay. Guys like us, people like us with assets, I don't fear inflation
Nope.
at all. Okay. Bring it. Okay. Because also post COVID showed us where to position ourselves to do well there. Okay. Inflation equals asset prices go up, equals more K in the upper half of the K shaped economy. Okay. Now you offset some of that money printing with stimmy programs to get the lower K on the side.
Mhm.
That money eventually gets filtered to the top half, top 10%. Okay. On a long enough timeline, a couple years out. So asset prices go up a couple years out would be candidate JD Vance, presumably, right?
Mhm.
Okay.
Yeah,
But it
a
also means more,
Rubio Vance ticket, bro.
yeah, maybe.
Vance Rubio, whatever.
But this also means more social strife in time because we see the K get further apart. And we've watched this happen in societies over and over again throughout the long span of history. Okay. And that is where we get to the point where truly there is no middle class. Okay. And then there will have to be a reset. And the longer we put it off, the uglier it gets. But they're going to put it off because that's what a system does. Right.
Mhm.
Okay. Ain't the fourth turning grand?
Yeah. Yeah.
Okay. Now, for whatever it's worth, and I haven't researched it, I'm certainly not advocating for it. This is not financial advice. Neil Howe, the co-author of The Fourth Turning, he has an ETF out there, the Fourth Turning Fund,
Really?
that looks at these things. We have now completely exhausted my knowledge of it. I just know it exists. I never have gotten around to looking at it. But it is very intriguing because whoever is administering that fund, but he's the advisor on it, going in a fourth turning, these industries do well, these do poorly. So it's an interesting investment philosophy. I need to dig into that one.
Yeah, please do. That I'd be interested in that.
All right.
And the final quote here, quote, I win more for one reason. I move fast. By the time most people are done analyzing, I've already made 3 mistakes and found a better way. Love that. Who's
And
that quote by?
I don't know. I just found that one on the internet.
I love it.
Oh, so, and this guys, so I I've embraced a little more risk taking in some of my investment stuff, but when I come across a new idea, a new theory, something I'm thinking about, I'm forcing myself to move faster because I'm more cautious by nature, but I'm doing it with small dollar amounts. And I'll paper trade it for maybe a month or so. And then I'll go in and start doing it with real money, but in very small dollar amounts, and then start tweaking on it, do exactly what this said. So when I read this, it really resonated with me because it's like, you know what? I'll do this, and what's the most I can lose? That's this much dollars. Okay, well, hey, the market's going crazy. I'll give it a run. If it doesn't work, then I found something that doesn't work, and I'll
Mhm.
tweak it or I'll move on and do something else that works for me. And I've started trading options a while back. I do some of the risky stuff, but I do it with very small dollar amounts, and
Mhm.
the returns tend to be either astounding, like plus 5,400% for one of them right now, and there's quite a few that are down 98%.
Yeah.
But I use the same small dollar amounts. Now that's the gambling side. We're going to start talking options as insurance. I'm going to teach you guys what I do there, and that is insurance. That is actually a trade. I won't call it an investment. That's a trade that I hope loses 100% because that
Because
means
of
the
your
rest of the
upside,
market's
right?
going up
Yeah,
because of the
exactly.
upside
Yeah.
everywhere else. Because it's
Mhm.
not like I'm putting 25% in there. I mean, it's a very small percentage of the overall thing, but it will go up so dramatically if a big crash happens. Well, that puts me in my happy place. I've got that buffer, right?
Mhm.
That lets me, even though we know this something's coming here. This market's been up 9 months in a row, but that lets me keep playing on that side because I've got that insurance policy. And the nice thing about it is it's just math.
Mhm.
There's no, well, you got to pick, you got to short Nvidia or you got to short Tesla. You got to do this, you got to do that. No, it's the whole market. I mean, I use SQQQ, which is the triple short levered ETF, triple short on the Nasdaq,
Mhm.
and so that's levered 3 times, and then I buy options on that that then levers my money up again. So therefore, I use a very small dollar amount that then gets levered up repeatedly. The most I can lose is that dollar amount I put in. Okay, there are options out there where you can lose infinity.
And I would
Okay,
imagine you routinely do lose the dollar amount you put in, but the
I
upside
yep
is
yep
so huge. Yeah,
yep
right?
absolutely. I just started doing this with real money. I paper traded it for 6 months to make sure it was going to do what I was thinking, even though it was a small
Mhm.
dollar amount, and it it works now. Luckily, over the last 9 months, it wasn't needed. At some point, it's going to be needed.
Yeah.
So, some people will kind of poo-poo this and be like, "Why would you do that? You're going to lose money." Yeah, well, I pay the insurance on my house every year too, and I lose money on that every year. It doesn't burn
Mhm.
down, and I don't sit around going, "Why did I do that?" It's just prudent, right? I
No,
think
and
this is
like you
the
said,
same thing.
you could probably sit there and go, "Man, I hope I lose that."
Yeah. Oh yeah, I
Yeah.
do. I
Man.
do because I'm looking at max, doing percentages in my head. Maybe 0.5% of the
Mhm.
portfolio goes into that. Actually, a little less than that. Between a quarter and 0.5% goes into that 4 times a year.
Mm.
Okay. So I'm looking at losing maybe 2% of the portfolio guaranteed, but everything else is going up. If the other,
Right.
right. And part of this is age based too. I'm 57. So I can't, I don't want to suffer the drawdown, right? I'd rather guarantee a 2% loss per year in value of the portfolio. But if everything else is going up 18%, I just shrug and go, okay.
Well, I love the way you've, framed it intellectually for me. It's an insurance policy.
Hmm.
You pay 2% insurance policy kinda thing. It's like, dang, that just makes sense.
Yeah. And this has led me go not do riskier things, but also not be sitting there. Okay, is this when it's going to start? Because I've got that buffer, right? So it's also gotten me away from the computer watching the markets as much.
Yeah.
Which has increased my quality of life.
I love that. You can work on cars and bust your knuckles now.
Absolutely. Almost got the Corvette done. So,
well, send us a pic when you do.
Yep, will do. It's got to get through the paint shop and stuff, which is going to be like, just that one's going to hurt.
That's going to be a big bill, buddy.
Oh, paint jobs are expensive nowadays.
Big time.
So, yep. So, yeah, I think that's all we got, guys. So I would expect a lot of volatility this year. There's going to be times you're very, very happy and times you're very, very sad. But when it comes to the markets, get the emotions out of there. And every time they start printing money, that is basically signaling the bottom of the market. When I'm not talking about this 40 billion a month they're doing right now. I'm talking something happens, then they start going, okay, we're going to do, TARP 2.0 and print all this money. The bottom's pretty much in.
Yeah.
But we got to get to the bottom, which is going to hurt.
Oh, thank you. Will, thank you once again for another amazing show, my dear friend. Gerald is and Dr. Gordon Botson joining us late. Please go back and watch the entire show. Will crushed it again this morning. So, Will, whenever you're ready, sir, take us out.
The fight's coming, guys. Be ready.